Are you wondering where to put your money in 2025? Should you go all in on crypto or stick to the safety of stocks? With so much noise online, it's hard to know what's actually smart and what's just hype. In this video, I'll break down the real pros and cons of investing in crypto versus stocks, using today's economy, realistic returns, and practical strategies for normal people. Stay to the end, and I'll share how I'd personally split a portfolio in 2025 based on current market conditions, plus the insights of some of the world's most respected investors. Section 1. The case for stocks in 2025. Let's start with what most people consider the safe bet: stocks. Stocks, especially broad index funds like the S&P 500, have delivered average annual returns of 8 to 10% for decades. They represent ownership in companies that grow over time, generate revenue, and reinvest profits. Pros of stocks: historical stability over time, even through recessions. Compound growth that builds wealth without extreme risk. Dividends: passive income and reinvestment potential. Widely accessible through ISAs, pensions, or apps like Vanguard, Freetrade, or Trading 212. Realistic outlook. In 2025, the global economy is still recovering from inflation spikes, energy price volatility, and tech layoffs. The markets are less explosive than during COVID stimulus peaks, but also more predictable. Legendary investor Warren Buffett still advises retail investors to keep it simple. He famously said, "Consistently buy an S&P 500 low-cost index fund. Keep buying through thick and thin, and especially through thin." Section 2. The case for crypto in 2025. Now let's talk about the wild card: crypto. Crypto has produced massive returns in the past. Bitcoin, Ethereum, and altcoins have made people rich and caused huge losses too. In 2025, crypto is maturing. We have more regulation, mainstream integration, and even banks offering crypto exposure. But it's still volatile. Pros of crypto: high upside potential in short and long-term cycles. Some coins offer staking rewards, like digital dividends. Blockchain is driving innovation in finance, gaming, and even AI. Younger generations increasingly view crypto as a hedge against traditional finance. Realistic outlook. Bitcoin is expected to hover between $60,000 to $90,000 through 2025, especially post-halving. Ethereum remains dominant in DeFi and NFTs, but altcoins, they're still a lottery. According to Ray Dalio, founder of Bridgewater Associates, crypto is an alternative money asset. It has potential, but needs diversification. That means don't go all in. Crypto should be the spice in your portfolio, not the main course. Cons: extreme volatility. Bitcoin can drop 20% in a week. Tech vulnerabilities, hacks, scams, and exchange collapses. Ideal for young investors with time to recover, people willing to stay informed and manage risk. A small speculative slice of your portfolio, 5 to 20%. Section 3. Real-world examples and strategies. Example: 1. Sarah, the cautious investor, age 35, mid-level income. Sarah earns £38,000 a year and wants to build long-term wealth without too much stress. She's not into day trading or chasing hype. Strategy: invests £300 per month, 90% goes into a low-cost S&P 500 index fund via Vanguard, 10% goes into Bitcoin and Ethereum through Coinbase. She auto-invests on the first of each month and never checks it daily. Result: over the past 5 years, she's seen average returns of 8 to 10% from her stocks, and although her crypto dipped in 2022, it recovered by 2024. She's now sitting on a portfolio worth £28,000, with zero stress and no need for financial wizardry. Sarah didn't need to gamble to build wealth. She just needed time and consistency. Example 2. Jordan, the balanced investor, age 28, freelance graphic designer. Jordan has a fluctuating income but wants to grow wealth and still explore high-growth opportunities. Strategy: saves £500 per month when income is strong. 75% goes into global ETFs and dividend stocks. 25% goes into crypto, mostly Ethereum, Solana, and staking, via Kraken. Follows macro trends to rebalance every 6 months. Result: his stock investments are compounding steadily, and his crypto portfolio doubled in 2023 during the recovery phase. His portfolio is worth £42,000, and he has clear long-term goals. Jordan balances upside and safety. He treats crypto as an opportunity, not a shortcut. Example 3. Tasha, the aggressive growth investor, age 23, side hustler. Tasha works full-time and runs a side hustle reselling vintage fashion. She's okay with higher risk for higher reward. Strategy: invests £250 per month from her side income, 60% into growth ETFs. Tech innovation global funds, 40% into crypto Bitcoin, ETH, and smaller projects like Polygon and Chainlink. Uses apps like Trading2, 12, and Binance and follows crypto news closely. Result: in 2022, her crypto dipped 45%, but by 2024, she had recovered and is now up 70% overall. Her ETFs are up 12% year on year. She's built a £21,000 portfolio in under 3 years. Tasha accepts volatility and keeps learning. She knows the risks, but she manages them smartly. Key observations from these real examples. Nobody went all in on crypto or stocks. They diversified. Each person had different income levels and risk tolerance, but still made progress. No advanced knowledge was needed. They just used simple tools and stuck to the plan. Their success came from habits, not timing the market. Common mistake: putting 100% into crypto during a bull run, then panic selling in a dip. Smart investors hold through the cycle. Financial educator Ramit Sethi says it best: you don't need to be perfect, you need to be consistent. Section 4. The Smart Portfolio Split, Realistic 2025 Strategy. Want a simple breakdown you can follow? Here's how to structure your investments. Conservative portfolio, 90% stocks or ETFs, S&P 500 global funds, 10% crypto, Bitcoin, Ethereum only. Balanced growth portfolio, 80% stocks, mix of ETFs plus tech dividend stocks, 20% crypto, BTC, ETH, 1 to 2 additional coins with research. Never invest in crypto what you can't afford to lose. And always have a separate emergency fund. So, crypto or stocks? The real answer is both, in the right amounts. Stocks build long-term, reliable wealth. Crypto offers growth, but with real risk. In 2025, the smart move isn't picking one side. It's creating a portfolio that fits your goals, your timeline, and your risk level. Comment below: what's your current investment mix? Subscribe to Wealth Unlocked for honest, no-hype finance content that actually helps.